Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on March 24th, 2020 with a daily Forex market analysis and live trading webinar for you. And we have a lot to cover today. Obviously, everyone's aware of all the action that's going on in the markets. We just want to pull up our disclaimer real quick to remind you that this webinar is for information and instructional purposes only. Remember, this video is streamed in with a little bit of a delay, so we were behind the markets by a little bit, as well as the fact that the trades that we are going over and showing you how we manage them, you are also in behind, so don't try and chase them. This is for illustrative educational purposes only, and we have some buy and sell signals shaping up. And real quick, if you want to learn how to trade these buy and sell signals, there's a book called High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, let's go to our www.forex-trading-unlocked.com website. We have the workstation page already pulled up for you. We have all kinds of numbers out there, CPI, PPI in the UK, and all kinds of other stuff. But to be quite honest with you, I think that the coronavirus is overshadowing everything. I don't think there's anyone contesting that. So we have the Euro US dollar, which right now has been in a nice little rally mode today. It's quite the range already. You can see the low yesterday was at 107.21, and the high today is at 108.88. So it's not quite the volatility that we've had on most days over the past 2 weeks, but definitely for any given day in the euro is definitely quite a good range. So we have an upside corrective zone here, which heads into the $10.67 to a $11.63 area. Look at how wide that is. It's just because of the volatility. But our real upside breakout point isn't until a $12.42. Below a $6.35, this market is back on edge, pounding new lows. But right now we're looking for a little bit of a consolidation to lower trade. But apparently right now the bulls seem to be in control. Let's see if the dollar is going to start to have a little bit of a corrective move. After all, it's been very strong for the past couple of weeks. So seeing a little correction right now is certainly very, very normal. We don't have a valid buy or sell signal going on right now. We have been short the Euro US dollar. Let's see, as you can see, since this position was since the 16th. We have our stop in at 110.10, so we're still way above the market. We have a nice lead on this trade, and we're keeping this in action. We also are long the U.S. dollar Swiss, long the U.S. dollar Canada, and long the U.S. dollar Japanese yen. So we have that in the FX markets. We stayed away from the futures markets because we're coming out of rollover, and it's always a little bit of a tough trade with the future front as the front month flips and volumes change and the spreads are all moving around. So that kind of because of the nature of futures and futures options with expiration, it causes a little bit of indifferences in pricing. So right now we're sticking with the Forex cash as well as binary options, which we also have those trades on too for today. So let's just take a look at that real quick. So for the options we have, we are long the U.S. dollar yen, we're long the U.S. dollar Swiss, we're long the U.S. dollar Canada, and we are short the British pound U.S. dollar. So we'll get into those as we get to those markets. But for the outright Forex, we are still short the Euro U.S. dollar. And our stop is right in the middle of this zone. So we're still bearish on this one. We don't have a buy signal, so if this bottom is a confirmed short-term bottom or will be over the next few sessions, then we do have this as our target area for an upside correction should this rally right now continue itself over the next few sessions. Is that likely? Anything can happen in this market. It's so crazy, but right now the dollar bull seems to be very strong, and it seems that the dollar, once the U.S. markets close, that's when it gets its sell-off, and then overnight, before the U.S. markets, it continues to get pounded, and now, as you can see, that's come back off its highs, and it seems to be, once the U.S. stock market opens, that the dollar starts to begin to rally once again. So we'll see how that manifests itself today. If that's the case, then we should see this market back towards the lows of the day, and then obviously has us in a neutral to bearish posture, which this market, remember, has made lower move lows, lower move highs, and continues to be a bear. So now let's look at the British pound US dollar, the second biggest component in the dollar index next to the Euro US dollar. Sorry, put the wrong symbol in there. British pound US dollar is coming up here, and as you can see, well, we got to pull the chart over. We've had quite the slide over the past week and a half. So we're using the low from a few sessions ago and the high as our pivot points for breakouts. $19.31 upside and $14.14 to the downside. Look at that. It's a over $5 move for the range, and as you can see, that was all done in one day. So today the bulls are here just like they are in the euro. They're holding just below the highs, a little bit stronger and firmer than the euro is right now. Once again, this market's making lower move lows, lower move highs, and after this radical sell-off, I mean, markets go out like they come in, but I don't think that the pound has remotely the resiliency to maintain a rally. But should this be at the beginning of a correction that holds, and if dollar weakness starts to prevail, then we have this upside correction zone of $1.2312 up to $1.2528 as our restrictive cap for any type of rally that may manifest over the next couple sessions into the next week or so. Now, obviously, if there is something to make the dollar become a major bear, that would change things and give the pound a chance to get back up towards the levels it was a month ago. But right now, due to the coronavirus and the shutdown, and especially how they're handling things in the UK, I think we're going to have a very abrupt rally again, just like we had this one, break, just like we had this slide here. So right now, we're looking for a corrective move to give us another sell signal to confirm a continuation of a downtrend. Once again, we are short a couple options. We have the British pound greater than 116.75 and British pound greater than 114.75. So now since we shorted those, we want that market to not get above those levels. So let's take a look at that once again. So we have 14.65, which is, let's see, 114. We'll change this color, make it a little bit easier for you to see. So 114, and we're going to go with 65. Okay, so that's the first one we got there. So we have 114.65 and we have 116.65. So let's go 116.65. This is our other one here. Once we get these coordinates in, this will all make sense. Okay, so these two purple lines here are our two binary option strike prices. So we are short these levels. So we're looking for another test of support and a slide below these levels. If this market stays above these levels, well, then obviously we're going to be wrong with these trades. So right now we're taking a little heat on the short British pound US dollar options. We are long these other ones. We'll get into that as we get to those markets. So this one taking a little heat, but we, like I said, we're overall a bear. If we're wrong and a correction is ensuing, then obviously we're going to be losing on those trades this week. So we have a couple that are doing okay, and we have a couple that are not doing so hot. Now we have the U.S. dollar Swiss, which we also have we're in the cash as well as in the options. We have 98.75 as our level. So let's put that in here, 98.75. All right, so this is our strike price. As you can see, the market is below this one. This one is the loser as well. So we are long in the outright cash, which we are still up in, and we are down in the binary option for this one. So we're going to have to maintain these, watch these trades. We do have a downside correction zone of 95.39 down to 94.55. However, the reality is that this market has been a very big bull as of late. We've made recent higher move highs over the past few sessions. So right now, higher move highs, higher move lows. Let's not get too crazy on being a bear. So that's why we have this option on. We could be totally wrong on both positions. So we'll see how this manifests. We're going to keep on working it as the week goes by. So now we have the U.S. dollar Japanese yen, which we also have we are long from 111.25 for the strike price. So I'm going to put 111. This one here is currently a winner, 111.25. Excuse me. And then we also have we are also long in the cash as well from 108.26 and 110.23. So right now we are just right at this line, just below our line for the option. So hopefully we get another rally, make higher move highs. We are targeting this market back up at 112 half to 113 even. So if that does come out over the next few sessions, well, that'll turn this trade around and we'll make money on both the cash and the options trades. So right now, we're keying off the high from a few sessions ago. We are an aggressive bull. We're not looking for a downside correction yet. This market has continued to make higher move highs and higher move lows, indicative of what? A bull trend. So now in that same trade zone, let's take a look at the New Zealand dollar, US dollar, which has been struggling for quite some time as well. Over the past few sessions, it has been holding. However, I would be very cautious of this trade. We could settle positive today with this one and still yet come slamming to new lows over the next few sessions. We have an upside correction zone here of 59.67 up to 60.84. This probably will be the extent of any upside correction. There's too much negative fundamentals and now technicals that are bearish this market that are just pounding it. A correction would be healthy. It would definitely if it came up into this upside corrective zone. However, right now we have to be careful with how the US dollar is trading. Let's see how it settles today, and especially tomorrow's action. Like if we were to settle right around where we're at today and then have a serious sell-off tomorrow, then we have a potential pattern that would be called a continuation pattern, which would be a bearish continuation pattern, meaning that the New Zealand dollar, US dollar will probably bang new lows as well as take it back down towards this 54, maybe even 53 cent level. So it's not looking very good for New Zealand dollar, US dollar. And the same as for the Australian dollar, US dollar, which is even in a worst case scenario. They have basically a similar chart. We're going to watch to see how this settles. If we had a major rally today and confirm with follow through tomorrow, well, then I would say that the upside correction is in. We don't even have an upside correction zone for the Australian dollar because this one seems to have been much more volatile and more under pressure than a New Zealand, and is not as stable as the US dollar yen either. So right now we're watching this. We are an aggressive bear on this one. I think that you have to wait for today. Today and tomorrow are going to be indicative. So Tuesday's positive close potentially with a negative sell-off tomorrow would most likely confirm a continuation pattern for a lower move low in the forecast up ahead. But we have to see how that manifests. Right now, it's probably a range trader's delight in this one. Volatility dropped yesterday. I think it's, even though it is rather volatile compared to the volatility we've had over the past 3 weeks, the volatility yesterday is not quite that significant. In fact, for a Monday, it was rather shocking to see how, after the past few weekends, how it was even, normally that would be a busy day and people would be like, oh, wow, we were very active. But in lieu of how things have been for the past few weeks, this was actually kind of a very slow start to the week, when you keep things into perspective, that is. So now as far as, we see that the dollar seems to be weakening versus the major currencies and some of our lesser major currency crosses. Look at this. We have the U.S. dollar TRY. This market's made a higher move high yesterday. Today's the first day it hasn't made a higher move high in over a week. In fact, for months, actually, it's made almost higher move highs almost every single day. Not very many down days either. So right now we have a little reprieve here in the U.S. dollar, Turkish lira. It seems like the dollar is definitely under stress right now as we come into the U.S. Stock market opening. Let's see how the dollar prevails over the course of the day. So we are still a raging bull on this one. The upside pivot is yesterday's high and the low from a few sessions back at 637. This is our downside breakout point. This right now, for us to have a nice little correction, if it's going to happen, it's most likely going to look like something like this. This thing is a raging bull. You can see corrections are only for a few days. They may stall for a week or so, but the main corrective slide is over a couple sessions. So if you're already short this market, and because this market has such wide spreads getting in and out with the bid and ask, if you do get to see this market push an extreme, use caution with your risk, because odds are you're going to get a snapback or a very quickly settle into a sideways trade before you make another explosive run for new highs. I think overall the U.S. dollar TRY is going to be a bull for quite some time. I don't think this is going to let up for at least a few months. Not necessarily that would be the case with the U.S. dollar versus other currencies. Another currency where the U.S. dollar has been a raging bull is the U.S. dollar Mexican peso. Not so today. For the first time in a while, we're looking kind of negative. But it did make a higher move high today. And as you can see, we were at a 25, almost 25 and a half pesos to the dollar today. It spiked at. So even with the lower trading today, it's a good time to be in Mexico if you're on vacation, because you just think we went from 18 and a half to 25 and a half pesos in a month. So that's a 7 peso deal. That's kind of a big deal, don't you think? You know, you have basically like almost a 30% appreciation of the currency against, or the dollar against the Mexican peso. So for all of you out there in Mexico, if you're up for vacationing and for some reason not maintaining social distancing like the responsible people are around the world to try and slow things, well, then I guess at least you're getting a good deal. While you're getting the virus, you're getting a good deal on the price of your margaritas down there as well. So, but hopefully people are starting to catch a clue and realize that we just have to keep our distance for a few weeks, and these things will pass. All right, U.S. dollar, Canadian dollar. Let's see how this is shaping up. This is another market that's been a bull for a while, and today has pulled back a little bit. It's been stalling for a few sessions, but as you can see, it's trading in the upper part of the range, even though it's lower. And be very cautious with this market. Once again, higher move highs, higher move lows. We're using the pivots from a few sessions ago for the high and the low. So at $1.4676 confirms that this bull is continue. It's raging higher move highs, and if not, then we are looking for a failure from $1.4139 to confirm any type of downside correction, which would then have us targeting this downside corrective zone. Notice that this downside corrective zone falls above this gap. Now, all gaps eventually get filled. How long it takes to do that, well, that's always that's a Scooby-Doo mystery, especially in these kind of markets. So we'll have to see how this goes. Right now, we are not very bearish. I think that if we were to continue lower and take out this lower pivot at $1.4139 with this volatility, it's not unlikely for us to touch down into this corrective zone. Only falling from $1.36, obviously markets go out like they come in. If we were to come back all the way down here, well then, even if we didn't enter in a true bear trend and we were going to go back up to the highs, I think there's a chance that we would spike down and fill this gap. That's really, really, really pushing it right now. I think the only way that that would happen is if there was a extenuating turn of events in which the U.S. dollar would collapse. But right now, I think with everything firing on all cylinders and people trying to get everything in motion, it's probably unlikely that that's going to be the case. So once again, to cover our positions, we are long the Japanese yen, or the U.S. dollar Japanese yen. We are long the U.S. dollar Canada. We are short the euro U.S. dollar, and we are long the U.S. dollar Swiss. This is all in the outright cash, but then we also have our British pound US dollar position, which we are short. Those two strike prices, remember that. So we are bearish. We're basically bullish the dollar on everything. Not that we want you to follow us. Remember, this is for illustrative purposes, and we've had these trades on, so you don't know when we change our stops or when we do or don't get out, unless you are part of our signal services and having these trades managed and triggered for you. Then please do not try and duplicate these. If you like them, then sign up for the service. So, and have it managed through your own account. We don't touch any of your money. We have nothing to do with it. All you do is tag team on the orders. So, but that's what we want you to definitely be aware of. But for sure, read the book that we mentioned earlier, High Probable Japanese Candlestick Patterns, because we do have some continuation patterns forming, but we're going to have to wait for the next day or two before we can get into those signals, because they have to occur first. Remember, never try and be a prophet and try and guess that a signal is happening in front of itself because you think you can sell a market better or buy it better. Typically, I can say from experience and from watching other people make that same mistake over and over and over and over and over again, it does not work. So please always wait for a signal, no matter what your signal is, before you try and execute it, because it's little things like that to keep your bottom line from falling apart. So it's not necessarily going to make you money. We can never say we're going to make you money, but we can sure keep you from making stupid mistakes that's going to cost you money. So, and that's what we're here for. We're trying to put you on the right side and keep you from doing the wrong things, that's for sure. So not that we're always right. No one ever is, but we definitely try and err on the in the winds of caution, and also make sure that our reward to risk levels are strong enough that they're viable for taking on opportunities that present themselves, because we never know how they're going to pan out. You can see how things are moving in this world today. It is crazy. So now let's look at the euro US dollar one more time. We started there. As you can see, this market still continues to hover below its lows. Now it's hovering right around the highs of the last two sessions, which is kind of critical. Like I said, remember, the U.S. stock market just opened a few minutes ago. First 15 minutes to half an hour, lots of noise, especially with what's going on in Washington and all the corona numbers and what have you. But notice that we are now, like I said, hanging right by the highs of the last two sessions. We spiked higher today, but that doesn't mean anything because we still are making consecutive lower move lows and lower move highs. So until we change that and make a higher move low and then another higher move high, we are still bearish this market. Remember, it's been a very big pattern that when the U.S. markets closes, the U.S. dollar sells off for a little bit because of the strength that it ensues during the day. And then while the other markets open up overnight, the Asian markets and then the European markets, the dollar seems to be under pressure. But then once the U.S. market opens, voila, here we go again. You can see the last two sessions, we hovered on highs and then went all the way back down, settling only slightly positive on the day. And this is something I need you to take into consideration too, because even if we settle positive today, if we have a sell-off tomorrow, let's just say hypothetically that we do settle right around where we're at today, and then if we have a sell-off tomorrow and end up negative on the day, depending on where that close is, we'll have to monitor that. We may have a continuation bearish sell signal forming in the euro US dollar. Now, if we have a continuation bearish sell signal happening in the euro US dollar, then that means our short that we've been riding for a week, over a week actually, may actually potentially have another week of selling pressure under it. So we'll see. We're hoping for that trade. We don't know if it's going to manifest yet. A lot can happen between now and tomorrow's close. We got to first basically settle where we're at now, or even a little bit lower, but settle positive, and then we need a big sell-off tomorrow to confirm the continuation pattern. So we're looking to watch out for this. And if you want to learn how this continuation pattern works and what to do with it, well then what you should do is once again read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. And with this you can obviously once again utilize the best buy and sell patterns used for over 400 years. Now this continuation pattern, we're not going to tell you what it is unless you read the book, or you have to wait until tomorrow's video. So please subscribe to our YouTube channel, and then you will know what is going on. So we want to thank you very much for your time, and please check us out every day at www.forex-trading-unlocked.com. Good luck with your trading, everybody, and